Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 14th of October Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through our slightly different run through in here for a Monday, where we take a look at the shape of the week, slightly bigger picture, looking back at last week's activity. What were the major fundamental macroeconomic, central bank, geopolitical events that were shaping markets from last week continuing into this week, and what's the outlook for this week? What are we looking to shape the markets going into this week? So we'll take a look at that bigger picture shape of the week. We'll run through both the trade day weekly recap and outlook, and also the macro matters that we publish each weekend. We'll go through those. We'll take a look at some articles from the major news wires that build on those, and then we'll take a quick look at the charts. Where are the potential trigger points? What's going on in the actual markets that you guys are trading going into today? So first of all, we'll kick off with a weekly recap and outlook, and also the just going on to the macro matters. So this is just a summary. Remember, in the three columns that you have below where you're watching this video, if you're watching it if you're watching in the members area, below where you are watching it, there's three columns. The left-hand column is the technical analysis reports that go up from market charts. That's me, market charts every day through the week. Then there are the fundamental reports that we put out the weekend. So that's these reports here, the macro matters, and the weekly recap and outlook. The weekly recap and outlook, just a shorter summary version of the macro matters, the longer version. And then we have the right-hand column, which is the news provided for us by our partners at LiveSquawk, the Squawk service. So those are the news items on the right-hand column. So this is on that central column. I'm going to actually go through the actual macro matters. So US equity averaging, US yields grinding higher, S&P Dow back at all new all-time highs at the end of last week. NASDAQ also posting gains all over 1% last week on the gains. NASDAQ now only 2%. That's like the real target going into this week, and here go just 2% below its all-time high. Treasury yields, despite equities managing to go higher, yields continue to nudge slightly higher. So we broke 4% a week or so ago, and then now we've had four consecutive weeks of higher yield activity on the US 10-year note, up to 4.08% at the end of last week. So continue to grind higher, and then usually higher yields are deemed a negative. Higher yields, potential negative, particularly for growth stocks, higher long-term interest rates. However, the equity markets are obviously holding up particularly well. Yes, Hurricane Milton was devastating, but there was actually less damage than potentially expected in here. So, it's not a positive. We can't obviously take it as a positive, but it's a kind of a net positive in that, the expectation was for something far worse. So not having a significant negative impact on financial markets due to being less damaging than expected. Fed minutes last week, we'd already pivoted towards more of a chance for the rate cut in November to being only 0.25%, so 25 basis points for the next meeting was the expectation. That certainly was reinforced by what we had from the minutes that were released last week. What we saw that was the 50 basis point cut that was delivered in September. Some members favoured the 25 basis point reduction, and while the majority did support the larger move, there is really now an expectation for us to move to a 25 basis point rate cut going into the November meeting. And this has probably been further reinforced by the US CPI data, which actually came in slightly higher than expected. So we are down on the year-on-year data headline annual rate to 2.4%, which is above the consensus of 2.3%, but still heading in the right direction lower. So moving towards that Fed target of 2%. US earnings season kicked off on Friday. We had JP Morgan, Chase and Wells Fargo all delivering results and slightly better than expected in here. So a good start to the earnings season. We move into earnings season now in earnest going into this week. We've got the table down here. So nothing really of note today. We'll take a look at in a little more detail. We've got United Health, Johnson & Johnson, and then Bank of America, Goldman Sachs, and Citigroup all on Tuesday tomorrow. So significant tomorrow. ASML in here released on Wednesday. So one of the large chip makers, as long as we live, Taiwan Semiconductor on Thursday. Morgan Stanley also back on Wednesday. And then of the, kind of the Magnificent Seven or the FANG stocks in here, we do have Netflix reporting on Thursday, and then to end off the week, P&G and Procter & Gamble and American Express. So some really big names in here coming up as we go into earnings season. Let's say continuing really with the tomorrow, nothing really of note today with the banking industry, but we also say get United Health and Johnson & Johnson. I think the big focus is going to be those continued banking stocks that we get Tuesday through Wednesday, and then the obviously the ASML and Taiwan Semiconductor. So looking at those chip stocks, and then Thursday Netflix. Always a barometer of not just the US consumer, but the global consumer. So we'll see how Netflix delivers on Thursday. On the data side, we did get some Chinese data. The CPI, PPI, and trade report returned some to how that came through this morning. Going into the week, US is not particularly heavy, but we do have quite a lot of important European data and UK data. UK employment report tomorrow, German and EU WZEW surveys tomorrow too, along with EU industrial production, Canadian CPI. UK inflation reports on Wednesday, Australian employment, EU CPI. So we've got both UK and EU CPI data, so obviously a large part of the global economy reflecting that inflation data. So that's going to be important to watch all of that. On Thursday, we do get the ECB interest rate decision. We'll focus a bit more. I do have one article on that, but we'll focus a bit more on that as we get closer to the main US data for the week. US retail sales, industrial production comes through on Thursday. And then Japanese CPI, Chinese GDP, retail sales and industrial production, and UK retail sales to end off the week. So it's a fairly light calendar if you look from the US side in here with really the US retail sales and industrial production, the highlights of the week. But we do have a lot coming out of Europe, and that can have knock-on effects into the US market. Really, the main focus though for the US markets are going to be on these earnings reports as they come out through the week. So we'll certainly be watching that. So if you look into today, you'll see in here there's very little. We did have that Chinese data in here, slightly disappointing on the trade balance in here. In PPI data continuing to go lower, negative PPI data in here. Going into the day, the focus is going to be on Qashqai, Walla, and then Qashqai again. Qashqai at 9 o'clock from the Fed. Walla at 3 o'clock. These are all Eastern time, by the way. 9 o'clock Eastern, 3 o'clock Eastern, and then Qashqai again at 5 o'clock Eastern. So watching all of those. Earnings, we've already spoken about those. Nothing really of note in here today. And then Tuesday, we go into those reports. Those earnings reports, as we've already detailed. I'm not going to go through all that again, but you can see them all on here. Just to highlight, if you haven't been with us, this is the earnings calendar I tend to use. I'm going to put it in the chat in here. So there's the earnings calendar. It's from investing.com. And what I do is I do a filter in here, do the filter, and I've got it filtered for just the US. And then this is the important one to tick the 3 stars to the bigger companies. Otherwise, you're going to get hundreds and hundreds of companies if you don't tick that. So what we're really looking at, because we're looking at how it's going to affect the major averages, the major indices, how it's going to affect the S&P Dow and the NASDAQ. And so that's why we're concentrating on the bigger, large cap stocks. Let's move on. So they've replaced in here. So just so you know, in case you go and search for 5 things to start your day, they've changed it now to their morning briefing. So the morning briefing, so it's no longer called 5 things to start your day. Now the morning briefing. Nothing really significant of note in here. America sending advanced missile systems to Israel. In here, Kamala Harris and Donald Trump may be too weak and unstable. Says Donald Trump may be too weak and unstable to lead. Again, not really impacting us. Boost for Bitcoin climbed above the 200-day moving average in here this morning. Canadian politics, not really impacting us. A company called OpenAI is a company called OpenAI, no space and with a space in here. But nothing really significant in here going into today in here for us to really be focusing on. Futures mix ahead of a week packed with earnings, economic data. But as I said, it's going to be light today. I think it's going to be a bit of a grind day today. We have been pushing higher. I do think we continue to push higher. New highs on the S&P and the Dow. Nasdaq edging up towards that all-time high as well. I think there's an upside bias, but I don't think we're going to see many fireworks today because we do have all of those earnings coming out throughout the week and kicking off really tomorrow. And then we had the obviously China is continuing to try to boost its economy in here. Key takeaways of China Airlines plans to revive economy and its housing slump in here. And so they are continuing to produce stuff in here. But obviously the data we had today is slightly disappointing. Stocks drift with earnings set to test the bull market in here. European Central Bank expected to cut rates on Thursday. We'll focus a little bit more on that as we get closer to morning. Big China doubts as economy struggles. We've already looked at that data. It's Columbus Day today, right? So Columbus Day, I think the bond market, the bond market's closed. Coming out closed, there's Federal risk in the bond market, but the New York Stock Exchange and Nasdaq remain open. So bonds closed today. So bond futures are still open, I believe, but the bond cash market is closed. CEOs and odds about the S&P 500's earnings outlets. Company guide is optimistic, while analysts are bearish. But as we said, JP Morgan, Wells Fargo data in here, season started on Friday positively. 5 questions for the ECB. We'll come back to this as we go into the week in here. But will they cut rates? The expectation is that they will cut rates in here. So we'll be having a look a little bit more at that as we move into the week. On the overnights in here, we have the Nikkei slightly up, Hang Seng slightly down in here, but a real dislocation between those markets and the US markets at the moment. The European markets are mixed. UK FTSE down 0.2 to the German DAX up just under 0.2, and the French CAC down about 0.4 this morning. And we go and take a look at the, I thought I already opened this up, but if we go and take a look at the futures in here on the overnight, nudging up to new highs in here. So although the Dow is slightly lower in here, S&P about 1/10 up, and the Nasdaq up about 0.25%. Turning our attention to the CME Fed Watch tool, as we've been talking about over the last week or so, the expectation now very much, pretty much nailed on for a 25 basis point cut at the next meeting at the beginning of November. Over an 86% chance that we cut by 25, and a 30% chance that we remain unchanged. No chance being priced in for a bigger rate cut, more than 25. And then if we look at going into the year end now, the market is now kind of coming in line. I've highlighted this previously. It seemed very much out of line, but in line now for another 25 basis points. So the bigger chance here for just over an 8% chance that we get another 25. So a total of 50 basis points lower by the end of the year to 25. So the market pricing that in. And yields, as we said, continue to nudge higher in here. So we have had a slight nudge higher towards the end of last week, grinding higher. And the outlook on price is obviously bearish, remains negative in here. So higher yields equals lower prices higher yields. So the outlook for all the bond futures, 30, 10s and 5s and 2s in here, all still looking very negative. But the indices, we made new all-time highs. That's the Nasdaq, not on the Nasdaq, but on the S&P at the end of last week. Strong end to the week, close on the very highs in here at the all-time highs, and the Nasdaq's closing positively as well, pushing up to September peaks in here, and now aiming for the highs that we posted in the summer back in July. Taking a look at those charts, so there you see S&P making another new high today. It looks bullish. It was a really bullish end to last week, pushing higher. I don't expect an explosion to the upside today, but certainly looking for further upside. And if we go and take a look at the Nasdaq in here, Nasdaq at the very top, just getting very close to this peak in here, the upside level there, 25.38, not quite there. So looking for a push up to and through 25.38, and then that would open the door. There's not a lot of resistance actually, all the way up to like 20,008. 40, 50 area. So I don't expect it to go there today, but I think through earnings season, we could easily push up to there. And then maybe this week, even up to the all-time high that we have posted from the summer. So bullish going into the day, not expecting too many fireworks as we have no real significant data. And we have the earnings are starting really to kick in from tomorrow. The Fed speakers are out there. So watching out for those Fed speakers today. As I said, Kashkari at 9 and then again at 5 in here, Eastern time, and Waller in between at 3 o'clock. Probably not going to, they've all spoken more recently. So I haven't spoken, I don't think, since the CPI data, which was just on Friday. So we might might get a few, sorry, not the CPI data. We might get a few more not on Friday, earlier last week. So we might get a few more clues even from Kashkari and Waller as to if they've shifted at all. But I mean, at the moment, it's pretty much nailed on that we're expecting a 25 basis point cut at the next meeting. All right, guys, I'm going to wish you a great trading day. Take care, stay safe. I'll be back with you tomorrow with another Bull versus Bear webinar. Bye.